Fortis Healthcare will sell all of its hospitals to Manipal Health. The deal, which has been in the works for some time now. Remember, Bloomberg reported yesterday a deal will be announced very, very soon. It will also see the South India-based Manipal and TPG Capital pump in an additional 3,900 crores in the merged entity. In fact, that will be the resultant listed entity. Darshan is standing by with the deal structure. And what could the deal possibly mean for the existing minority shareholders of Fortis? Darshan.
Yeah, so it's basically a two-part deal. First, let's take a look at what exactly Fortis has done. First of all, Fortis Hospital will be transferred to LaFemme, which is one of their. So what they're doing is consolidating all they have SRL, which is their diagnostic business, and they have Fortis, which is the hospital business. So they're combining all the hospital business into one entity under LaFemme. Once this happens, they will demerge the entire hospital business and they will transfer it to Manipal Hospital. So it will be a merger between the Fortis hospital business and Manipal hospital business. The merger ratio that they have given is 100. If you have 100 Fortis shares, you will get 10.38 Manipal shares at the time when Manipal lists. Because of this, what will happen is that Manipal also, there is this RHT. So Manipal Health will acquire the Religare Health assets because Fortis balance sheet is not strong enough to go ahead with the acquisition. And finally, there will be a reverse merger. So Manipal Hospital via Fortis Hospitals will be listed on the stock exchange. So this is the entire transaction. The second part here is, first of all, is that there will be an indirect open offer on Fortis Malar, which is another listed entity. So this is there. The second part other is SRL Diagnostic. So Manipal Health will infuse 720 crores to buy 20% stake in SRL Diagnostics, which values the entire company at 3,600 crores. The other part is that Manipal will look at acquiring majority stake in SRL. So they have committed to acquire 20%, and they are negotiating with the other lenders to acquire more than 50% stake. So the additional 30% stake is something that they will look at. In this entire exercise, they're looking to infuse 3,900 crores. Now, how is SRL valued? This deal values SRL at 3,600 crores, which is much lower than what the street was valuing. EV to EBITDA of 21.5 times, which is lower than Dr. Lal, but higher than Thyrocare. So this is the entire deal for SRL. Now this is how the structure will be. This is what Fortis Healthcare is currently. They own SRL, they are minority shareholders, and Publix owns 99.2% stake in the company, given the fact that the promoter shareholding has fallen significantly. Now this is the Manipal plus Fortis combined structure, in which Manipal promoters will own almost 38% stake in the company. Public will own 41% stake, and TPG Capital will own 27%, and they are looking to acquire 50.9% stake in SRL and 100% stake in Religare Health Trust. So this is the entire structure that will happen. Now, what is the combined entity looking like, and what will happen? So presence, Fortis is strong in North India, Manipal in South India. Fortis has almost 3 times the hospital, and if you're looking at the number of beds, it's almost 1.5 times of what Manipal has. Even in terms of the combined entity, presence will be a pan-India presence, 45 hospitals with 7658 beds. In terms of financials, what we're looking at, the revenue is 3,700 crores on a 12-month trailing basis, while for Manipal it's almost half of it, but margins of Manipal are extremely high at 16%. Debt is pretty much the same for both these entities. So this is the individual breakup that we are seeing. On a combined entity, it will be a 5,200 crore top line, EBITDA margins of 14%, and debt of 3,600 crores is something that we're looking at on the combined entity. So this is how the combined structure will look at for both the entities.
So what's the computation on the valuations? I mean, what do Fortis shareholders get in?
Yeah, so it's a little confusing deal, but because you have to come out with the implied valuation. So I'll get to it. In terms of the valuation and what works for. So first of all, it will be the #1 provider of hospitals in terms of revenue and EBITDA. So it will go ahead of Apollo. Hospitals #2 in terms of hospital and operating beds after Apollo, and it will be third in terms of the operating matrix in India. So the combined hospital is pretty decent in terms of the financials as well as the services. Now this is the valuation on the current market price. Fortis is valued at 20 times the hospital business, while Manipal is valued at almost 30 times. So this is the valuation math that has happened as far as this entire deal is concerned. Now, what works in terms of this deal? Firstly is that the combined entity will be India's largest hospital chain. The second part that we are looking at is the track record in operating large facilities. Manipal has that. And finally, what we're looking at is pan-India presence. Now, more importantly, what doesn't work, and that is the big concern, and we'll talk about that now. Firstly, if you're looking at it, the first big problem is there's no open offer for Fortis shareholders. What will happen is the Fortis Healthcare Hospitals will be merged with Manipal. So Fortis Healthcare shareholders will be just left with a holding company as far as SRL shares are concerned. The deal valuations are not mentioned, but if you do an implied valuation in terms of what Yes Bank owned 15% and now it owns 5%, so the implied valuation of the entire deal comes at almost, the combined valuation comes at almost 22,000 crores, in which Fortis market cap is almost 7,500 crores. Post all that, the other expenses and the SRL business, Manipal's valuation comes at almost more than almost 12 to 13,000 crores. So Manipal is valuing itself at much higher with revenue and market share which is almost half of Fortis. So that's the problem, that Manipal has given itself a better valuation in it. The other problem is the fact that the entire SFIO probe and all, so there's no clarity what will happen in case what the promoters did. If any liability comes, they've not given any clarity on where all this will come in. SR valuation is lower than what the analyst estimate. So overall, it seems like it's not a very good deal as far as Fortis minority shareholders are concerned.
Yeah, so the open offer is protected by law, right?
Yes.
This merger, so you don't have to do an open offer in this situation.
But because a lot of people bought Fortis on the
that's
view.
their problem.
Yeah.
I mean, they bought it to punt on a deal or an acquisition strategy which they didn't know fully about.
Okay.
It's a merger, it's fully protected under the exemptions of the takeover code. So that's not an issue as much as I think what you're talking about is the valuation. But Darshan, you've answered your question, haven't you? If there are legal issues that overhang Fortis, and if there is, let's say, there are more holes to uncover in the probes that are ongoing, then obviously the company would attract a lower valuation.
Yeah, so it is. So it's not done at a initially there were like 5 or 6 bidders, so everyone thought that there will be a bidding war or something. But the valuations were expected to come on the higher side. They haven't come on the higher side. Manipal has actually, if you're looking at the deal, Manipal has squeezed Fortis on all sides. So for a Fortis minority shareholder, this doesn't seem like a good deal. So that's what we are saying.
Just a quick question. Is there any, I mean, in the way they've structured the deal, is there anything that would sort of ring fence them from SFI or related issues which may come at the Fortis Healthcare
that's
level?
what I said. That's the concern.
Yeah.
They haven't said anything. There's absolutely no mention of the SFIO probe, no mention of what the auditors will say as far as the financials were concerned, because the auditors signed it off, but they didn't give any kind of comment. So there are issues that are there, but there is absolutely no word on all that.
Just a very off-the-cuff response to that, and to add to what Darshan said, given that this is all broken in the last 10 hours and it came in at 11:30 in the night, how are they going to predict what the SFIO will find? They can't. So they can only put that into or bake that into valuations. This is a company that didn't have a controlling shareholder because the promoters had, thanks to their pledged shares, gotten diluted down to less than even 1%.
0.7%.
Yeah, so in the company. So it was mostly the banks that held the pledged shares. Yes Bank, I think, being the leading
15%, and now it will have 5%.
So I think it was mostly the banks that owned the shares of this company, and they were probably looking at the best available recovery in this. Now, we don't know what IHH bid, if anything at all, because they were supposed to be the only other suitor in the process. We have no idea how much they offered, how they valued the financial, sort of probes that are going on right now. So, yeah, I think Darshan's point well taken, that there is no valuation disclosure in this.
Yeah.
More details should be forthcoming. Isn't there an analyst con call going on right now?
There is. We're trying to log on, but I think we are on. We will try to get in.
Yeah, so I think they probably will disclose more in the analyst con call. I get that minority shareholders might be disappointed. They usually all wait for a pop in a transaction like this. But this is a beleaguered company with too many clouds over its head, and no controlling shareholder. To be able to demand a premium of any sort, right? What will the banks demand? Any buyer knows this is a distress sale of sorts.
Yeah,
right?
The buyer has done what it will do best, right? Any buyer would probably try to squeeze the best out of this, which is negotiate the best deal possible, and considering that there's a bit of a grey area around the probe.
See, I think the other thing is, they haven't given valuation, but what they've said is that in the current entity, Yes Bank owns 15%. In the combined entity, they will own just 5%. So the valuation in terms of the shareholding comes to 5%. So it falls by 1/3. But even on a 1/3, Manipal will control majority of it. So the Manipal valuation that they have given on an implied basis. So we are saying this is a rough calculation.
Yeah, sure.
This is not something that, So on a market cap of 7,000 crores, where Yes Bank will own 15% stake, on a combined market cap of 22,000 crores. If you just do a reverse calculation, they will own 5%. So the entire deal just shows that Manipal is getting a much higher valuation, and they are getting in whatever they want as far as this deal is concerned. I would
presume this was the best deal on the table available, because Yes Bank, if it's okay with the shareholding going down from 15 to 5%.
No, it would have to, right? It's a merger.
Precisely.
You will get
No, so I'm saying if they were with an assumption that the two suitors available, Yes Bank would have had a say or some bit of opinion on the eventual deal valuation, that a 15% shareholder, by virtue of getting these assets because they were pledged, etc., would have given the consent to the deal, if not in a formal way, then in an implied way, means that this was possibly the best option available at the current point of time.
Yeah, I suppose that doesn't answer Darshan's question saying why is the valuation of this type, but I suppose we'll wait to see if there are more details before we...
I think the management had said, well, post the numbers, they spoke to us. They said they have 3 or 4 bidders. So I don't know where...
Those are negotiating tactics, I would imagine, as well.
I don't know. So I don't know what everyone did, but this is the best they could get out. I think then the stock price will say what it was.